Okay, we are ready to begin Chapter 16. And Chapter 16 is all about job order costing. So let's look at our very first exercise, number 3, and it talks about cost of materials issuance under the FIFO method. So complete the material issuances and balances for the material subsidiary ledger under FIFO. Determine the materials balance. Journalize them. All right, so here we go. On the first, they have a balance of $285, and then on the fourth, they purchased or they received 40. That's the report. They received 130 at $32. So we bring it first in, first out. So what we do is we bring the balance down, and then we add the 130 at 32 for a new amount. On the 10th, appears that they issued 365. So the first ones in are the first ones out, which means we will get rid of all 285 and some, and that leaves us with 50. So on the 10th, after this issuance, we're left with 50 at $32. So we got rid of the first layer and went a long ways into 80 into the next layer. On the 21st, they received another 110. So we have our 50 layer and then the new 110 that we just brought in. And then on the 27th, they issued another 100 pieces of material. So that takes care of, that 100 takes care of all 50 here, and then another 50 there. So that leaves us with 60 in that second layer. 60 at 38 or 28.80. All right, so that takes care of the first part. Complete the material issuances and balances for the month, $22.80. What's our ending balance? Letter B, again, 60 at $38 or $28.80. Now, we moved these items right here, 365 and 100 into WIP. So, we need to move it out of materials, this is part C, and put it into WIP. So there was 365 in the first one on the 10th, which was all 285 at 30 and then another 80 at 32. So there's our 11,110. And then on the 27th, we issued another 100, so that would be 50 at the 32 and then another 50 at 38 or 3,500. So the sum of those is our journal entry, 14,610. Okay, that takes care of number 3. Number 4, it says here's some materials. Journalize the entry to record the issuance of materials. So we got a whole bunch of requisitions there. And the thing to notice is in the job number, notice there's 4 jobs and one that says indirect. So what we're doing is, if you look at this journal entry, is the sum of all of those 5 amounts, 976, 412, 187, 156, 19 is right here, 2,345,000. Of all of those, they're all direct, except for the indirect one of 150. So if it's indirect, that goes to our overhead account. The rest of it goes to WIP. All right, let's continue on with number 5, entries for materials. So they got a whole bunch of information going on here. It says balances on April 1st are as follows. The materials purchased are as follows. That's the second section there. And then the third, materials that were requisitioned, fabric, polyester, lumber, glue. All right, and it says here the glue is not a significant cost. So if it's not significant, what they're telling you is it's indirect. So indirect means it's overhead. Letter A, journalize the entry to record the purchase. So that's that second section there. you add the 820, the 315, the 555, and the 80 right there in the second section there, right here as well. That is where we put it all to materials. Journalize the entry to record the purchase of the materials purchased during April. It doesn't really say that it's on account, so whether you used cash or AP is just fine. Letter B, journalize the entry to record the requisition. So now what we're doing is we're taking everything out of, that's the third section, taking it out of materials and moving it over into WIP. These journal entries don't change much. So if you look at the total there on in that third section, the total column, 1,747,600, that's coming out of materials. And the only one that's indirect, which is overhead, is the glue, 83,600 right there. The rest of those numbers, 810, 320, 534, goes to WIP. Letter C, it says just determine the balances in each of those ledger accounts. Well, let's start off with just fabric, and they're all the same. Fabric, if you look at the first section there, 58,300. Purchases, second section, fabric, 820. Bingo. Third section, fabric, which got moved over into WIP, 810. What's our balance? 68,300. And that would be the same for all three. Four of them. Number 6, entry for factory labor costs. So now we've been looking at all this time here, materials. So those are the direct material. And what's the three components to inventoriable cost? Direct materials, direct labor, and overhead. So now we look again at all of this. And if you notice that the columns all are jobs, except for there's one indirect. So of course, if you look here at this entry, there's our debit to factory overhead. The sum of all 8 of those amounts right here is our wages payable, and then the rest of it to balance it goes into WIP. So identify what's overhead, know the full amount, and the rest of it goes into WIP. Let's move to number 8. Entries for direct labor and overheads. This Schumacher manufactures RVs. They use a job order. Factory overhead is applied to jobs on the basis of a predetermined overhead rate of $23. The direct labor rate is $29. Once again, the factory overhead is applied to jobs on the basis of a predetermined overhead rate of $23 per direct labor hour. I would underline that. The direct labor rate is $29. So letter A, it says journalize the entry to record the factory labor costs. Well, once again, if you look at all 1, 2, 3, 4, 5, all 6 numbers there, all of them are going to jobs except for supervision. So that is going to go into overhead. It's indirect. The sum of all 6 of those numbers is 60,292, and we're applying those other 5 jobs to WIP, work in process. Letter B is the part that I want to make sure you see. Journalize the entry to record to apply factory overhead. So remember, here is our overhead account, our bucket. This is the debit side is our actual costs, and our credit side is where we use to apply. So as costs come into this overhead account, those are of course actual. So as we pay, for instance, this factory supervision, $12,500. Notice here, it's debited. So it goes in here, $12,500. However, we are going to probably apply based on a different amount. This is only one piece of the big pie. So the application is going to be different. And that's where we're going to always have a slight difference in what is our actual versus our apply. And as you read your chapter, that's what causes, are we over applied or are we under applied in overhead? So in this case, it's applied based on labor hour. Okay, so we have, if we look here, we have $47,792 in this account, into WIP for labor. And we are paying them $29 an hour. So that means we have $1,648 in the amount of hours. There are 1,600 hours into this WIP account. Well, we apply it based on hours at a rate of $23 per hour, which is $37,904. So what we do is we take it, now we're applying it, taking it out of overhead and applying it to the job. We're applying it to the job. Okay, so let's continue on with number 9. Factory overhead rates, entries, account. Okay, so this solar company operates 2 factories. The company applies factory overhead to jobs on the basis of machine hours for factory 1, direct labor hours for factory 2. Estimated factory overhead cost, direct labor hours, machine hours as follows. Determine the factory overhead rate for factory 1. So factory 1, again, it said it was based on it was based on machine hours. So let's look at how many machine hours. There is 1,250,000 estimated machine hours. Our total factory overhead is 18.5 million divided by the machine hours. This is our machine hour overhead rate. Factory 2 is based on direct labor hours. Again, our total estimated overhead is 44 million, and it's based on 800,000 direct labor hours. So factory 2 is based on $55 per direct labor hour. And the question is, why would one factory use machine hours, another one use labor? And the reason is what is the cost driver? What affects, what parallels most to when we incur this overhead? Well, as far as factory 1 is concerned, it mirrors, or it is closer to machines. So the more machine hours we have, the more factory overhead we should have. What drives the cost in factory 2? It's labor. So the more labor that's put into a product, the more overhead that is put into the product. All right, so we took care of A and B. Letter C, it says the entries to apply. Okay, well, we notice here in factory 1, the machine hours for August is 105,000. What is our rate? Right here, 1480. So we take 1480 times 105 and we out of overhead, right? So here's our overhead, out of overhead and into WIP. Factory 2, it's based on direct labor, and in August there was 64,500 hours at a rate of 55, and there's our same journal entry. These journal entries stay very, very consistent. Okay. In letter D, here we go. So determine the balances in our factory overhead account. Okay. Well, let's just look at here. If this is factory number 1, and they're both basically run the same way. So factory 1, we took out 1,554,000. In factory 1, the actual that went in was 1,515,800. Okay, so that's actual. What we applied was slightly more. So in factory 1, if you notice here, we over applied, right? Because this is greater than what we put in, and that's fine. It's going to change every month, and it's going to be sometimes a little high, sometimes a little low, and what you hope to is at the end of the year it'd be pretty close to where it wipes each other out. Question has been asked before, what would you rather end up with, over or under? And of course we want all these amounts to be small, but if I was to answer which one would I prefer, I'd rather see that we've over applied, because if we've under applied, we have not allocated all our costs, and therefore we're still stuck with some of them, and those are expenses that we essentially have to eat. So if we over apply it and then basically our product cost ends up being more and we have to charge more for it, at least we're recovering our costs. So what we'll do is we'll stop right there for a moment. It gives you an opportunity to re-review what we just did, and then we'll continue with some more exercises.